Welcome to Disruptive Capitalists, the show where purpose-driven entrepreneurs and bold investors share how they're reshaping the world by investing time and money in a way that improves lives and creates wealth. So let's get to it. All right, everyone. Thank you for joining us again for another great episode of the Disruptive Capitalists Podcast. My guest today is Sean Tepper, who is the founder and CEO of Tykr, a platform that helps people buy and sell stocks with confidence. Today, Tykr has over 12,000 customers in over 50 countries. Sean, thank you for joining the show.
Sam, thanks for the invite. Appreciate it.
So tell us a little bit about yourself and what is Tykr?
Yeah, so my background, about 20 years in tech, 15 years investing, and how this came about was I built my first business in the late 2000s and ended up going through a merger. It was just an agency building software for other businesses. Really good experience, but I realized at the time it's not really a scalable business, and it was a lot of trading time for a paycheck. So I'm like, hey, how do I flip that equation and get money working for me? So I got into investing around 2011, did that for about 4 or 5 years. I was investing a little bit in the stock market and a little bit in some private businesses. I didn't do very well. I was kind of like break even at best. And I'm like, yeah, this is not going to work if I keep this up the next 20, 30 years. So I was looking at Warren Buffett and Charlie Munger and researching their information. And Warren Buffett has stated this, get this. He said, if he were managing 10 million or less, he could make 50% per year in the market. In context, the S&P 500 typically returns about 8 to 10%. I'm like, well, that's quite a bold statement.
Yeah.
So I knew at that point, you probably agree, he's not a gambling man. He doesn't use feelings or emotions to pick stocks, which means starting with math. That's probably where they're starting. So I went down the YouTube rabbit hole, read as many books as I could, found some of the calculus from a guy named Phil Town, put it into Excel. I'm kind of an Excel nerd. Yes, I am one of those. And then I used it on my own the next 4 or 5 years, making returns between 15 and 50%. This brings us to 2019. And I started sharing this Excel sheet with a few other people. And they're like, hey, you've got something here, but can you turn it into a software so it's easier to use? And I'm like, all right, green light. I've got a SaaS idea, which has been my dream business model for by that point, 10 years. It's just so hard to create and find something that's not already out there in the market. But anyway, yeah, I found low competition. There seems to be a need here. And one thing that I did, and I'll wrap up my backstory here, but one thing I did to really make Tykr easier is I was thinking of, hey, what's the easiest to understand rating system around the world? And I thought, you know what, the traffic light. It doesn't matter what language you speak or what country you're from. Everybody gets the whole green, yellow, red rating system. So in Tykr, our stocks are either on sale, watch, overpriced. On sale is green, watch is gray, and then overpriced is red. So yeah, we then took a year to build the first version. And then fast forward to today, we have, like you said earlier, over 12,000 customers in about 50 countries.
That's amazing. So what is Tykr? Let's just say I am 16 years old. I've got $100 in my account and I want to get into stocks because I hear it's cool. Is Tykr something that I can download and use?
Yeah, so Tykr is a web app and mobile app. And what it is, the model is it's analytics, like simplified analytics. So it's got that rating system I described. We've got a confidence booster powered by AI. The goal is to get an 80 out of 100 there. Walks you through and it teaches you, how does a business make money? How does it compare to other businesses? What's the track record of the CEO? A lot of stuff that if you did manually could take you hours, if not days. If you're a complete beginner, you can probably do it in about 60 seconds or less. So it's got a lot of tools like that. It's got automated alerts on your favorite stocks. It's got alerts, for example, we call stockpiling alerts, where let's say you've got a really good business and the market is pulling everything down, kind of like the Trump tariff wars, we're pulling everything down. That's actually a really good buying opportunity. Well, our platform is going to let you know. And then we've got a portfolio tracker. People can track all their stocks. You can create multiple portfolios. So if, you're 16, you'll want to, of course, at that age, you'll talk to your parent or guardian and say, hey, can you help me set up a custodial account, which is where your parent or guardian has ownership of the account, but you get to invest in it. Then when you turn 18, you inherit that account. So to be honest with you, if you're not just 16, I'm talking to parents who have like 6-year-olds, all the way up to 17. I'm like, you should probably get a custodial account for your kid and start buying some really strong stocks using Tykr, because by the time they graduate, you're going to be in a really good spot.
Yeah, that's fantastic. When I remember I first started investing in stocks when I was in high school, because I had a friend there that was investing in stocks, and I'd never crossed my mind that I could do that. And so I went on TV, and I think I listened to a talking head like Kramer or somebody like that, and started doing what they said to do. And everything I did that they said to do lost money.
Yeah.
And so instead, I was like, I really like, a few years later, I was like, I really like this Mac stuff, Apple stuff. And so I bought Apple stock, and that stuff did fine. So the things that I liked, like, Warren Buffett says, buy stuff that you like and know.
Yeah.
And so I started buying stuff that I liked and knew, and that stuff all did fine and did good returns.
Yeah.
So how does, like you said, a parent who has 6 kids, not 6 kids, maybe they have 6 kids, a 6-year-old kid.
Sure.
Normally, you're supposed to go give it to a investment advisor. So why would they use Tykr instead of going to an investment advisor?
Yeah. So with financial advisors, a lot of people don't know this. You have financial advisors, you have wealth managers, and investment managers. Their job, so people know, and they will agree because we have quite a few advisors using Tykr, their job is not to build your wealth. It is to protect it. So I see too many people that are in their 20s, 30s, and 40s putting their money into bundled products. I'll give you some examples. ETFs, index funds, and mutual funds are essentially bundles of stocks. It can be between 100 and 1,000, sometimes more, sometimes less. But those products are not there to build your wealth. And that's advisors, they're not there to pick stocks for you. They're not there to understand how businesses work. Their job is to be a fiduciary, which means protecting your money. And that kind of blows people's minds. They're like, really? I'm like, well, an advisor is also not going to polish your resume for you so you get a higher paying job. They're also not going to build your business for you. That's not, again, it's wealth protection. So in our onboarding, when you join Tykr, we actually educate people on the differences between wealth building and wealth protection. We're focused on wealth building, individual stocks. We teach people you should own about 10 to 15 stocks. Warren Buffett made his first million investing in about 10 stocks or 10 private businesses. And then as you get older, where you near retirement or financial independence, then you move to wealth protection. Now, with advisors, we actually work closely with them. We still tell people you should still work with an advisor because they'll be able to handle the situations where, let's say, taxes are coming up, or let's say you're building a business. How do you budget for that? Or you're saving for a home. There's a lot of questions that we at Tykr, we do not answer because we don't provide personalized advice. But this way you work with an advisor, you get those questions answered, give them some money to protect it, but also they're starting to recommend Tykr to their customers. Because people are naturally, as you can imagine, they're joining Robinhood, they're joining E-Trade, and they're still wanting to do a little bit on their own. Typically, it's 80-20 rule. 80% goes to the advisor, 20% on their own. Well, it's a complementary solution. So that way okay, so 80%, let's say, just hypothetical, is being protected by the advisor, and 20%, I get to grow it as fast as I want with Tykr.
That's fantastic. So you mentioned that as a SaaS. Can you explain what a SaaS model is, and then how is Tykr that?
Yeah, so SaaS, software as a service, essentially a subscription business. And I always wanted that because I'm like, all right, so I can have the software do the service. So I can onboard 100 customers, 1,000 customers, 10,000 customers. And I don't have to really provide the service. The software provides the service. It's really a brilliant model. Business models there's B2C SaaS like Netflix, which I subscribe to, Spotify, which I also subscribe to. Those are, you could call them SaaS. Some people just call them subscription, but essentially same thing, B2C SaaS. There's also B2B SaaS. Think of like HubSpot or MailChimp. Intuit products are popular. Adobe can be B2C and B2B, right? But subscription products.
That's great. That's absolutely great. So what does it cost to use Tykr?
Yeah, so our excuse me there. So our model is a 14-day free trial, no credit card. We just want people joining, test drive the car before you take it off the lot type
Yeah.
philosophy. And then our prices start at 15 bucks a month or 99 a year.
That's super cheap. So are you also charging a fee on the transactions?
No, 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 no. We with fees on transactions, you'll see that with like an advisor model or like a broker. We just wanted to be a straight up software as a service, no other fees, just keep it super clean, super simple.
So if I'm listening to this, I'm probably thinking it's a whole lot cheaper, less expensive to trade on Tykr. I get advice. I get a green, red, yellow, green light on
Mhm.
every stock. I could focus on the ones that are green. It's going to educate me on why they're green. And it's all in my hand, palm of my hand, and I'm not paying transaction fees.
You're my new pitch man, FYI.
Yeah.
That's it. That's it.
Seems like a no-brainer.
Yeah.
And it seems super easy. So how does that different than Robinhood?
Yeah, so we actually complement brokers, Robinhood being one. The big ones in the States here, Robinhood, E-Trade, Fidelity, Schwab, there's a few others. I've kind of got all of these memorized around the world. But their job is not to educate you on what to buy and sell. Their job is to actually protect your money in the platform. They're dealing with the SEC and FDIC. I won't go into detail there, but in other words, you have millions of people buying and selling stocks every day. Well, they got to make sure everything's moving safely from bank accounts to the broker, so on and so forth. So it's really complex. So we're working on a play here to help brokers because they all have an issue, and this is most of them actually that we've talked to, where people join a broker and they don't have a lot of confidence. They'll sit for 3 months, 6 months, 9 months, maybe 12 months, and they'll buy a few stocks, but they don't really actively invest. And that's an issue because they want people investing. So those investors are making more money, but at the same time, brokers make money on transactions. So our model is analytics and education. A screener as our model. We complement brokers. Fortunately, we're not the same model, but we do serve the same audience.
That's fantastic. Who is your target audience?
Yeah, so 80% of our customers are complete beginners. They'll hear about a stock at a cookout or from a friend, or they're browsing around on Reddit or on YouTube, and then they join a broker and they don't know what to do from there. That's really our target audience. It's 80%. The other 20% are experienced investors. They know what market cap is. They know what some of the financial statement lines are, like revenue, net income, EPS. They have a good understanding of that. And sometimes they use some of our competitors. And I give good reviews actually of our competitors because they're actually helping introduce more people to this space, which would be Seeking Alpha is a good platform. Simply Wall Street is another good one, and then Motley Fool. They're very focused on value investing. So I give my hat goes off to them. They're doing a great job. But those are our competitors in the space.
So Motley Fool was one of my first ones that I followed
Hmm.
a lot of, and I got probably maybe 70% of those I lost money on, and 30% I made money on in stocks.
Really?
Eventually,
Wow.
yeah. So Motley Fool was not great for me,
Okay.
and they filled my inbox with a bazillion emails. Educational for sure, but very, very good. Heavy on the newsletters. They learned that newsletters make money.
Yeah.
Um,
Yeah.
so good on those guys for doing that. I love so in the military, like green stoplight chart, green, red, yellow was used all the time. Like that's how we racked and stacked things or rated things and everything else. So I
Yeah.
love that model. Um, and it's like, is it green or is it cautionary or don't do this?
Keep it simple.
Uh, Keep it simple. Love it. I love that
Yeah.
model. And I know we've been talking about Tykr, but just for people's awareness, that's TYKR.
Correct. Yeah.
TYKR. So if you go in the App Store and you look up Tykr, don't do TICKER, don't do TYKER, just
Yeah.
TYKR, and it's right there. You can download the app.
Yeah. Yeah. Exactly.
That's great. That's essentially like you're democratizing expertise
Mm-hmm.
for
Mm-hmm.
$15 a month. You can be an expert up to date on stocks.
Pretty much. Yeah.
That's brilliant.
Yeah. Try to, you know, I have to say this about investing, and it's been this like thing that a lot of people believe, like, gosh, that's really complex stuff, right? And you have to get a master's degree or even a PhD. And it's really, to be honest with you, it has been overcomplicated for like the last 100 years and beyond.
Yeah.
When it comes down to it, we teach people this, but where stocks really move up and down the most, it's are the profits increasing or are they decreasing? Like there's a few other elements in there, but like that's one main thing. And it's like, oh, that makes perfect sense. Like if you're building a business, which you are, Sam, it's
Mhm.
like, do you want a business that's increasing profits or decreasing? It's
Decreasing.
right,
Yeah.
pretty straightforward. And that's how big businesses operate. And it's again a few other things we look at, like the revenue and the free cash and are the debts decreasing? That's good. And we kind of roll it up to that scoring system. But once people get in and realize like what are the levers that move stocks up and down, it's like, really? Like everybody's been using these $20 words for 100 years to make this more complex. It just drives me crazy.
Yeah. It's nuts. I, it's why I eventually got out of stocks. There's so many different people. There's so many different ideas. They don't use math or analysis. You watch Kramer or the others. It's all hype and whatever he's getting paid to sell. Influences a lot, and it's nice to have just some data-driven,
Yeah.
analysis-driven feedback of revenues or
Right.
profits, right?
Yeah.
The
Right.
lifeblood of a company. Forget
That's
everything
it.
else. If it's not making money, it's not a good buy.
Yep.
Maybe they're going to land a big contract that will help them become profitable, but that's a whole maybe. And then you're betting.
You'll see a lot of that, the speculative news announcements of like, ooh, I heard that. And not it did happen, but we believe it will happen. Then they'll buy a bunch. It's like you get into dangerous territory with that. Because if that doesn't happen, like they don't secure that, 10 million or 100 million contract or whatever, yeah, we get the rug pulled out from under us and the share price can go down. So we
Right.
tend to tell people this, I won't talk in too much detail here, but that's common with IPO stocks that recently go public. People are like, ooh, it's going public at $10. I'm going to watch it go to $100 in the next 6 months. No, that's not how this works. Typically, it goes public, share price spikes because of hype over the next week or two or a few weeks. Then the first
Yeah.
earnings report comes out and shows the truth. They have horrible financials, and then guess what happens? Falls off a cliff. Share price nosedive. So we tell people try to wait 4 quarters. You want to see those consistent quarters where it's
Uh,
increasing. And in many cases, it's an IPO stock is still trying to get its act together. I say that nicely, but it's trying to get its financials rock
it's
solid.
it's it's a thing, right? Because when you go IPO, it's a completely different set of criteria and people in your books, and it takes a long
Mhm.
time. And we've I have some friends that are going through that process right now so that they can
Wow.
IPO next year, and it's a big mess of regulatory work that they're trying to get done. And sure enough, they'll go IPO, and I'm confident they will do exactly that. Not be
Yes.
big, great company. They've been around for 40 years. They're doing lots of amazing stuff. But it's just a different animal.
Yeah. Careful what you wish for. There's companies that tend to stay private and you almost admire them like, yeah, you're a cash flow machine. Do you need to go public? Nah, stay
Nah,
private.
yeah.
Yeah.
Well, it's been wonderful to have you on the show, Sean. How can people reach out to you?
Yeah, I try to keep it simple. 2 places. One is go to, as you said earlier, Tykr, Tykr.com, or go to my LinkedIn. I'm really active on LinkedIn, Sean Tepper. Sean is spelled the Sean Connery way, if you guys remember the first James
Yes,
Bond.
I do. Anyways, yeah, I don't know about the young listeners on here, but that's
Sure.
SEAN,
Correct. Yeah.
um, for you non-Sean Connery fans. But awesome, Sean. It's been an absolute pleasure to have you on the show. We'll make sure all of The links are in the show notes. And any last comments for our listeners?
Well, first, Sam, thanks for the invite to be on the show. And two, if you're one of the 80% of people out there that's a complete newbie, which is totally okay. You're a beginner, but you want to get into stock investing. I just tell people, give it a test drive. It's free to join, no credit card. We try to make it easy.
Beautiful. Love it. And it's super cheap. And anyone probably on the planet can do that. You can get in there, $15 a month, and they can start learning stocks, and away they go.
Right on.
Awesome. All right. Thank you, Sean. And thanks, everybody. If this episode shifted your thinking, then share it with someone bold. And remember, capital is a tool. Use it to build a world you are proud to live in.